Awesome. Thanks, Jim.
You've seen what other people have had to say. Now it's time for you to put this stuff in action for you and for your family. We'll see you at the next event. Happy Tuesday. Welcome to the Opportunity Zone. I am Nate Armstrong of Home Invest. We have a heck of a show for you today. If you are new to our world, welcome. We are a faith-forward real estate investment firm. Today on the Opportunity Zone, we're covering all of the real estate news that's happening right now that can affect you as an investor. So if you're thinking about investing in real estate, stay tuned, especially to this episode. We've got some doozy-ish things happening right now. Number one, in 2024, multifamily sales surged. This is like comeback time right now for multifamily. We'll be talking about that. We'll be talking about what numbers you should be looking for, cap rates, etc. Additionally, 70% of commercial real estate investors plan to buy more in 2025. Why is that? Why are now more commercial real estate investors are stepping up to the plate? Also, today, we're going to cover the $60 million rescue loan. If you're wondering what a rescue loan is, we'll cover that, and we'll talk about how groups right now are using that to buy discounted multifamily property. And then we're going to kind of round things out. We've got Trump making the news again, wanting to buy Greenland. Is it a real thing? Does he have rights to do that? Can he do that? Does Denmark or England or any other European countries, what are their opinions? How do they weigh into this whole equation? So we'll be covering that and more. If you are looking for a potential investment opportunity, we'll be covering one of those as well. So tons of stuff happening today. I am joined today by my co-host, Mr. Chris Lavin. Are you here, Chris? If Chris is here,
I am here. Here's my smiling face. Ha! How's everybody doing today?
Good, man. Good. Thanks for jumping on with us, Chris. So
Absolutely.
those of you guys that haven't met Chris yet, Chris has been a serial entrepreneur all of his life. He most notably, he got back into real estate because he is offsetting some tax liabilities from the sale of another company. If you've ever been on a cruise ship before and watched television, you can just thank Chris. Chris had his hand in that. Oh, Chris.
Yes, sir.
I'm gonna go through a quick Bible lesson, and then could you open us up for prayer today?
Absolutely.
Okay, awesome. So I'm gonna cover something that some of you guys might know. It's from the Old Testament. I don't know that you've heard this angle before, though. Don't let the 10 spies, don't be like them. Don't let them influence you. If you know about the story of the spies, this will click with you. If you don't, pay attention to this. So in the Old Testament, basically you have Moses who leads his people out of slavery towards freedom. They're on this march. All kinds of crazy things happen, some miracles and whatnot. But then they get to this point where they're on the edge of the promised land, the area that they're supposed to go and take. And Moses says, well, before we go in there, I'm going to send 10 of you to go scout out the land, to spy, to see if we can take it or if it's too heavily guarded and what's going on. And so he picks the 10 and sends them in. And then they come back and they get some negative reports. The negative reports are basically a lot of people, they're saying, the people that are in the land, they're giants. They're scary, like they'll crush us. Here we are, we're little people, we'll get crushed by them. There's no way we can take that land. And there's two of them, Caleb and Joshua, two that take the opposing view. And they say, no, we can do this. We've got this. We can easily take them. Here's the plan. Let's do this. And so what's happening is you've got the majority saying one thing, and you've got the minority saying another. Guess who won that argument? Guess what happened to the entire nation that's basically waiting on the edge of this land that was promised to them? They decided to go with the majority. They got scared. Fear took over. And so they listened to a short-term advice from some folks that didn't have belief that they could do it. And it caused that entire generation of people to basically set up camp in the desert and wait. It wouldn't be until almost 40 years later when Caleb and Joshua would rise back again to help lead the people in, but the majority of that generation died in the desert. Today, we're going to be talking about investments, what's happening, and I promise you, there will be a lot of naysayers. There will be people saying, don't do it, it's scary, There's giants, you'll get crushed. Even those of you that are touching the stock market right now, it's had a wild ride the last 48 hours. And so as we go through it, just try to keep the mindset of Joshua and Caleb. Those were the two that eventually made it to the promised land. With that said, Chris, can I throw the ball at you for a prayer?
Please, take a quick moment. Heavenly Father, I first and foremost like to acknowledge who you are in my life. I seek for you to be here and to guide us so that we can educate and spread a positive message and give the people that are listening to us the confidence they need to take that first step, to do right by you, to do right by the gifts and tenets they've been given, so that they can expand their lives and live a fruitful life. I pray this in your name. Amen.
Amen. Thank you, man. Okay, we're going to dive straight into the news today. And there's just so much going on right now. I'm going to dive into multifamily statistics first, because anyone that's considering investing in multifamily right now, you really have to have your hand in the market. You have to know what's going on. By the way, for folks that are watching us live right now, and those of you that are watching us on the restream on social media, if you're already involved in multifamily or you desire to be, can you just put a yes in the comments? A yes for multifamily. I just want to get a pulse of how many people this might affect either now or in the future. Put a yes in the comments if multifamily is either on your radar or part of your portfolio. So Chris, this article here, basically the nuts and the bolts of it is it's what's happening in the real estate market. 2024 has come and gone, so we've got all the data on it. We know what the stats are. What's your take on what's going on with the real estate market for multifamily?
Again, multifamily has been the safest, as far as I'm concerned, the only commercial segment that I want to be in right now. Cap rates are going up, sales are increasing because as a result, prices are becoming more realistic. Because I think that there was a little bit of fear. But I think that the volumes, things are finally loosening up. Changing the presidency, changing in the people in charge, and everybody knows that Donald Trump is he's in real estate. So I think that the older generations are finally having the confidence to turn and go on about their business. I think that's why a lot of transactions are happening. Also, remember we're at that point, at that 5-year point. So 5 years ago, a lot of folks could get interest-only loans for the term of 5 years, when they would then start having to pay principal. Well, once you have to start paying principal, the NOI of the property comes down, and well, actually the cash flow of the property comes down, not the NOI. And then the profits aren't there to spread to their investors. So there's a whole bunch of little things that are lining up that are making people start to turn. A little more confidence in the market, people making plays. Yeah, I think that we're going to continue to see an increase in volume this year.
I agree with you. So the stats are out now, and they're basically saying that as of 2024, transactions for multifamily sales, they're up 22% over 2023. And so 2023 was basically like this year of, holy cow, what's happening? You had insurance rates going up, you had interest rates going up, and not a lot of people could get their arms around what was going to happen in the market. And so it drove prices down. And so now we're right in the middle of that trough that prices were driven to. They were driven down because of high insurance rates and high interest rates on mortgages. So the sellers had to drop their purchase price. And now you're seeing that. Now you're seeing capital come back to the market. You're seeing capital say, I need to grab that. We're not going to have a chance to grab stuff cheaper than we are right now. And so we're going after it. So it's interesting to see this happening. Just a couple of sub-bullet points from this article specifically. So cap rates increased. They also, cap rate increases moderated. So what does that mean, Chris? What's happened with capitalization rates as a whole in the multifamily industry in the last year?
Okay, so what's happened to the cap rates is because the cost of money has gone up so much. They've driven the cap rates down they've driven the cap rates up in order to afford to be able to afford the property. In other words, the cap rate affects the sale price, NOI. So NOI divided by cap rate gives you what the value of the property is. And as that cap rate goes up, value of the property comes down. So the cap rates have been coming up because the market rate for borrowing money has gone up. So if you can only have so much rent, you can only service so much debt. That means the price has to come down. In order for that to happen, the cap rate goes up. So we've been seeing that increase in creeping up, creeping up, and creeping up. But still, there's a little bit of old mindset where, people think that their property is worth twice as much it was, pre-COVID, where it's just not the case. I'm here to tell you that's the norm, and that's what's happening every place except Florida. Florida, they just haven't gotten the message yet. To find a deal in Florida above a 5.5 cap, you found a unicorn. Where elsewhere in the country, where 6.5, 7 caps are becoming more and more likely, and with motivated sellers, we're seeing 8, 8.5, 9 caps. So yeah, definitely significant changes.
So this is an interesting part of this one. I want to dig more on the Florida aspect because it's one of two hottest markets in the country for 2025. Yeah. So we'll dig into that in a moment. But one thing that caught my eye is this, and it's that mid and high rise sales. So this is taller properties. This is 3 stories and above typically. Those sales increased by 35% year over year, while our garden units, which are 1 and 2 story buildings, garden units, those only went up by 13%. Okay. Mm-hmm. What's your take on that? Why did the high rises go up so much?
People are getting out of them, right? So I don't know if how aware people are, but here in Florida, we have older buildings, especially along the coast where they're affected by the sea air, the salt air on the sea coming off the Atlantic Ocean or even the Pacific. And what that does is it erodes the steel inside of the concrete. So many of you may be familiar with the tower collapse in Miami. The condo tower just spontaneously collapsed without warning. There's a lot of buildings built during that era that are suffering the same stuff. So why are these things selling? Because the value of them is being driven down because of all these special assessments and the laws that the government of the state of Florida have put into place to make these buildings safe. So they're requiring inspections, they're requiring all kinds of construction done. Up here in Jupiter, not too far from here, they've literally gone and sheared off all the balconies because they were structurally unsound. When that kind of stuff happens, and you're an operator that's had a property for quite some time, and maybe you haven't operated it quite as well as you should, the value hasn't increased, so you can't refinance to get the money for the capital injection to make that stuff work. Easy solution, sell it, make it the next guy problem. That's why I believe that those transactions are increasing. Then that's why we're not seeing the same linear increase in the garden type apartments.
Well said, Chris. Well said. So the other interesting point that came out of that article on the market, and this is from a stat from CBRE. They're like the behemoth in the commercial real estate space. They said that 37%, 72% of people favor multifamily over anything else, and 37% favored industrial. So that's an interesting dynamic because a year ago, industrial was leading. And now multifamily has decisively taken the crown. So you got your big behemoths, they're saying multifamily right now. Yeah.
Well, and there's some other things going on in there, but it's becoming so expensive for a family to afford a house. It just makes sense. That's making the multifamily assets more valuable and more coveted.
You're spot on, Chris. So I want to dig into this one with you, Chris. This is the investor intention survey. This is basically the top apartment owners in the country all come together for this big survey. They give their feedback and they basically tell what they're going to do for the next year or so. The stat that I'm going to point to is that 56% of them, these are professional operators, 56% of them are okay buying properties with negative leverage. Chris, could you define what negative leverage means and what you think about it?
They know that I get very excited about this because this is nuts. There's got to be somebody that is smarter than me. They're basically going into the deal upside down. That's what's happening. They're walking into the deal. They know they're not going to make any money. They know for the first 2-3 years that they're going to spend more money servicing the debt than they're going to be getting on returns because of the price that they're paying for the asset. that doesn't fit our business model. They may fit other people's business models, but we are way too savvy with our investors' dollars to follow that business model. Because I can't walk into a bad situation expecting it to get better without a parachute. And for me, the parachute is zero, like no loss, no gain. That's zero. I can't start off a deal where I'm so far in the hole that if things turn sideways or something happens, that I can't protect my investors. So there are people willing to take a risk, but I think I would be more comfortable to take, $5 million and put it all on black and spin the roulette wheel. But that's me. That's me. Nope, can't do it.
Chris, you mentioned that parachute. It's funny when you and I were talking about when you buy your next plane, you said you're going to buy a very specific plane. Maybe you can tell people why you're buying that plane, and we'll talk about this parachute idea.
Absolutely. So a Cirrus Vision Jet is, many of you may know, has a couple of systems. My wife is not a pilot. I'm a pilot, and it's got a button you can push that will land the airplane where it needs to go. But more importantly, if you have a mechanical failure, because it's got a single engine, it's got a lever you can pull, and it's got a parachute that takes the whole airplane down safely with a little thud at the bottom. So it's a Cirrus Vision Jet. Mark's laughing at me. It's a Cirrus Vision Jet, and so that we're doing, because as much as I like the excitement, I also like to be safe, and that's where I am with multifamily real estate as well.
Yeah, and that's the point.
Yeah.
Bottom line is that when we get into a deal, we want it to be safe. We're going to have a parachute. We are the Cirrus Vision Jet. Like, there's just no way. When these guys are talking about buying with negative leverage, they're buying going in knowing that they won't cash flow, thinking, yeah, I'll bump the rents up. And that might be true. They might
Maybe.
get it 9 out of 10 times, but what if the economy gets a little tight? What if the job market gets tough? What if rents start dropping? And so we won't go in recklessly like that and buying on negative leverage. We want positive leverage, day number one, positive ROI for our investors.
Can I brag a little bit?
Please.
Okay, so one of the criteria for us to buy a deal is that we pay returns or dividends to our investors after the first full quarter of ownership. So if we buy a property September, in January you're getting a check. That's not feasible or possible when you're upside down with cash flow. I believe that it's our responsibility to increase the wealth of the people that are working with us and not risk your money. That's it. Sorry.
Spot on. Hey, the other thing that popped up in that article, Chris, was the 2 hottest markets in the country. I'll talk about Dallas, and then you can talk about South Florida on why the heck is everybody going after them. So basically, in the summary, they're saying they surveyed, remember, all the big operators of multifamily in the country, and they've narrowed down to these 2 cities, Dallas and Miami, or South Florida as a whole. So Dallas, Texas, they went through a bit of a curve. They had interest rates go up just like everybody else. They also had insurance go up. Texas is a Gulf state. It's on the water. Everything on the water had massive insurance hikes. Some stuff not on the water had insurance hikes too, but on the water particularly went up 2 to 3x. So it caused a lot of sellers to have to lower their prices in order to entice a new buyer to come in, paying new high insurance premium rates. Therefore, Dallas, it's become a mecca again. People are targeting it. They're going after it. They're saying, hey, buy now while it's discounted. So Dallas. What about South Florida, Chris?
Wow. Like I just don't even understand. I got to tell you the truth. South Florida is a hot market, right? So let's define Florida as a market to begin with. Everybody wants to live in Florida. I shouldn't say it like that. It sounds arrogant. But people want to come to Florida because of the warm weather, the ocean, all of these nice things. And did I mention it's a tax-free state, so you don't pay state income tax here. So all of those are beautiful things. But it goes back to what Nate was just saying. So we've seen a spike in insurance rates. We've seen all this stuff going. The cap rates are driven down. And by the way, Florida is one of those locations where people are buying at a negative equity stance or upside down from the very beginning of the deal. I just don't understand it, right? The reason I don't understand it is because what if we have another hurricane come through here and insurance rates start to climb again? You're already upside down. They start to climb again. You just took a bad deal and you went to worse. Again, it's a hot market, but what we're finding is that if we're picking the right deals and going after the distressed assets, we can make the deals work. What are distressed assets? Yeah, we buy them at a 5 cap or a 5.5 or 6 cap, but they are in fact a result of, oops, sorry about that. They're a result of poor management. In other words, the building may be at a 5 cap, but maybe they should be getting $300,000 a month in rent, and they're only getting 200,000. Well, if you examine the financials, look at the market, and look at the history of the property management of the property, you can see that you can very easily get it back up to where it's supposed to be, and then you could take a little bit of that risk, or the property hasn't been painted or maintained in years. There's a lot of those deals out there. And again, back to what I was talking about with the financing. If you haven't properly managed your property and your note is now due, there is no bank that's going to lend you the money if the property itself can't support the debt service of the DSCR. So these are all factors in finding a key deal here in Florida. I'm here to tell you, we're after the Florida market because of the natural appreciation of the properties, as well as the forced appreciation we can do. Because in Florida, we have a lot of, I like to say old people, but people that are retired or retiring, and they want out of doing the 9 to 5 of running the property, and they just want to turn it over. Give them a reasonable price, negotiate a proper deal, and you'd be surprised what you can come up with if you have the right relationships. That's the only reason that Florida works, but you've got to be on the inside and in the know. And again, we will not buy negative equity deals.
No, thank you. Positive cash
No.
flow, day number one.
Mm-hmm.
Chris, changing gears on you a little bit here. So there's this group called S2. They raised a ton of money, like in the billions, and they're going around and they're providing a rescue capital to basically bail out failed projects, failed multifamily projects, people that took out that low interest debt at a teaser rate that had spiked on them and now they're having problems. And they just took down 5 for 60 million bucks. What do you think of this? Is this a trend that we'll see more of? Like and maybe you can even define what your definition of that rescue capital might be.
So, wow. So this is a whole, like I could talk for an hour on this. So I'm gonna try to be very succinct. I believe it's a necessary evil. So a few years ago, we can get loan rates at 2%. Let me tell you, you look like a superstar when you have 2% of debt you've got to service. You can turn profits, you can do nothing, and you're going to make money. Well, that's not the market anymore. So it's switched. You got a lot of novice operators that have come into the market, think they know what they're doing, but in fact, they haven't been through the season of tougher, more difficult times. So now they're at a point where their variable rate or teaser rate is gone. They're looking at staring down the barrel of 12%. They can't get refinanced because the numbers don't work. They're stuck with a property and they're stuck operating the property, and they don't have the capital to buy down the note to get it to a reasonable place. That's where these people come into play. Maybe I'm a little bit of a conspiracy theorist. I believe that they're in cahoots a little bit with the bank and banks. What I mean by that is a bank does not want those foreclosed properties on their hands. They just don't. So they'll do anything they can to make that not happen. So they're subsidizing and helping these guys execute on these deals and make it happen pre-foreclosure, so that there's no bad paper on the bank's books. And I think that's crucially important to our overall financial stability of financial markets. The one question that I have in the back of my mind is, as these operators turn or sign these deals with these type of funds, do they really know what they're getting into? Do they realize that they're giving up the building? Do they realize that they're giving up control? And that's going to be a really tough pill to swallow when you know that just your incompetence has driven the value of your property through the toilet.
Yeah, that's a fair question, Chris. And I think that the answer is the savvy ones probably realize it, the unsavvy don't. Regardless, they're probably in a position where they don't have a second choice.
Yeah.
That's where they come to.
Hey, I'd like to be that guy too. I buy a property at a discount. I'm doing you a favor from saving you from going into foreclosure, or bankruptcy. I'm doing the bank a favor from keeping them getting it on their books, and I get an asset that I can operate, manage, and turn a profit with. I think somebody had their hand up.
I think Sue had her hand up. Sue, if you still got a question, you're welcome to join in. So Chris, you and I actually just did a call a week ago with a lender, a New York-based lender. I won't drop any
Yep.
names because we're still in negotiation on this, but they have a large deal in Florida that is in this
Yep.
position.
Correct.
It needs rescue capital. And I point blank asked the question. I said, "Hey, will you have more of these this year?" And he, without hesitation, "Oh yeah, yeah,
Okay.
we got more."
Yep.
So
Yep.
they are out there. And so Chris, if you'd like to follow in the footsteps of what S2 is doing, you let me know, man, because there's
All about
opportunity.
it. All about it.
All right, next, I'm going to change gears a little bit. We're going to talk a little bit about the single family housing market. We got a lot of investors out there that still have individual rentals. And so this question comes up quite a bit. The national home price basically is still rising. Okay, here's the stats. 4.3% increase in 2024. Now, I know you might be thinking, well, Nate, hold on. I'm sitting in Florida. I see price drops, or I'm sitting in this city in New York and I see price increases. Yes, real estate is very geographic specific. You can't just blanket the whole thing and say, hey, this is what it is. We're talking on a national basis, 4.3% right now, but that's national basis. Every single market will have its own nuances. So we'll talk about some of those in just a second. But 4.3% is what the increase was nationally in 2024. And Chris, I'm going to let you decide. We'll flip the coin. Do you think prices are going to go up in 2025 on a national basis? Yay or nay?
Yes, I believe they have to. I truly believe they have to. Um, and this all ties back to, and not a political statement, all ties back to what has happened over the past year. Money has gotten so expensive that there's not a significant number of new builds coming online. If there's no inventory and demand remains the same, right? What happens? Job prices continue to rise. So until we can get the interest rates under control so that builders can build, there's going to be a 2 to 3 year lag on decreasing prices.
So you are in line with two very big firms. Fannie Mae, largest buyer of loans in the country. Fannie Mae says that they're forecasting a 3.5% increase nationally across the board. And the more conservative Mortgage Bankers Association, they're forecasting a 1.3% increase for 2025. So your logic and thoughts are right in line with two of the behemoths that are out there right now. How about mortgage rates, Chris? Mortgage rates, are we going to have higher for longer? We going up, down, left, right? What are you thinking?
I think that we're in for a continued roller coaster ride over the next 24 months. And why do I say that? I fully suspected that immediately following the election results, I thought that the rates were gonna see a response. We did for 12 hours, and then things went crazy. So, well, I believe that the Fed is going to try to drop, or Trump is going to try to maneuver the Fed into dropping the rate several more times. I still don't think that we're going to see that 2 and 3% type situation for at least 2 more years. With that being said, there's a lot of hype in response to insignificant plays. What do I mean by that? The Fed drops a quarter point, all of a sudden anybody's going to go out and buy a house. And that's a reality. I don't think mortgage rates are going to go down that much over the next year. I mean, how could it? It would just affect the economy too much, too fast. You've got to scale this stuff off. Like they scaled it up, it's going to come off. But I'm also here to tell you that remember that when our parents bought their house, or in the 80s or late 70s, interest rates on mortgages were 10%. So it's not like we can't operate. It's not like we can't survive as a culture. We just have to live more modestly at the end of the day. So yeah, I think this is a new normal for a little bit. It will come down, and there'll be responses to that, and a lot of hype and energy, but you're not going to see 2% for quite some time, if at all, in the next 10 years.
Yeah, I agree with you, and so do the experts. So the forecast is right now that we're going to stick around 7% right now, and by the end of this year, we might see about a 0.5 point reduction, 6.5% overall. So that's what the forecast is issuing for us, and they're usually right in that ballpark. The only thing that could spike this is if we saw massive unemployment. If all of a
Yeah.
sudden the jobs numbers started going crazy, but it has not looked that way. People thought it would on Biden's last report, but it went the other way. Jobs
Well,
look
we
good.
can we can explain a lot of that away too, right? We can explain a lot of that away. There's a lot more manufacturing jobs being reshored. There's a lot of stuff happening along the way that makes a big difference in that arena. And I might just ask a little favor. You know, these questions would be a heck of a lot easier for me to answer if you already, since you already have the answers, if you can give them to me first.
No. We got to see the impromptu Chris thinking on his feet. What do you guys think? Should we prep Chris or should we let him walk into the fire? Hassan says, ha ha. And I see in the chat, we got Christopher says that there's a rescue project, rescue capital needed on a project in Atlanta. Hey, Christopher, if that's a real deal, feel free to send it over to my inbox, nate@homeinvest.com. I'd be happy to look at it with you. All right, Chris, on a very serious note, super serious topic. Can Donald Trump buy Greenland? Yes or no?
No. First of all, in order to buy something, it has to be for sale, right? Or you have to make a deal that who you buying it from. I don't think that's possible. But I love the optics, right? It makes for great fodder for TikTok and other things. I don't know if some of you all have seen the House of Commons and some of the things happening over in England, and they're quite controversial and distasteful words describing how this transaction will go down and all of that. I gives the people on the Tonight Show something to talk about. So
Yeah, just a little bit of fun. So let's see. The drama will continue. They're ramping up defense spending now for the island, for Greenland. So his words apparently invoked a little bit of outrage. Not a little bit, a lot of it. All right, I want to talk on two more serious topics, and then I'm going to turn it over to a potential deal. Those of you that are waiting for a deal, you don't want to miss this one. So first off, what the heck is happening in Florida specifically for multifamily? Chris, we've seen this trend of the garden properties slow down on sales. So the 1-story, the 2-story. Earlier, you educated us that 3-story and above, they have this new law after that condo collapse a couple of years ago, where they get assessed. And they get beat up basically by code enforcement that they have to do a bunch of repairs. That's on the taller buildings. The shorter buildings are the ones that are sitting solid right now. What's your take on those sales slowing down?
It makes sense, right? Because it's a more valuable asset. And since it's a more valuable asset, prices are increasing. And prices are increasing, cap rates are shrinking, and they're falling outside of a lot of investors' buy boxes. Back to that whole negative equity. How can I buy at a 5 cap and have 7% loan? It just doesn't work. It just doesn't work. The economics don't work. So there's a lot less people that are willing to do that. And anybody that understands acquisition of multifamily, you want to leverage the bejeebers out of the asset as much as possible so you can keep your capital free to do more deals. And it's just not possible. So you got to come in with a lot of cash in order to make those deals cash flow. And investors aren't willing to tie up that much cash to make it happen. So, and there's a smaller percentage of people that can do that have the cash reserves to go in and acquire these assets, either full cash or mostly cash. So the people who can acquire those assets, that pool is getting smaller and smaller.
Well said. And when Chris describes leverage the bejeezers, I want to put that in real terms. So it doesn't mean you take out 99% debt. We're typically coming in with 30, 40% down payments, equity, like real cash into these deals. So we come in substantially with skin in the game to make sure that our properties are not going to tip over from leverage. What Chris means though is that when you can get long-term fixed debt, so we're talking 6% fixed over a 10-year window, maybe even longer, that is a good loan to take. If you can make more than 6% off the money by churning it through the rental machine, this big property, it's a very good thing to have on your property. This graph right here is the actual breakdown by vintage. So the yellow is pre-1992, the green is 1992 to 2002, and the blue is stuff built after 2002. So this is basically what's selling by year. So you can see that the newer stuff, 2002 and beyond, that's trading pretty rapidly right now. The older vintage is sitting on the shelf, so to speak, especially that stuff in the segment of 1992 to 2002, kind of that mid-age product. The other one interesting in here, let's see if the graph pops up for it, is just transaction size amounts. So you can see what people were spending. 2021, there was this rush. People were trying to grab Florida. Then 2022, they got smacked with reality. Interest rates are up. Insurance costs are up. 2023, they got hit again. 2024, it just dropped down all the way down to this level. And now we're seeing people come back with force because prices have lowered so much. So we're in this interesting spot where people grabbing multifamily today, you can actually buy for less than the cost to rebuild.
Yes.
Imagine that.
Yes.
That's how far insurance has pushed prices down. So this is, I really believe it's a very unique opportunity to get into multifamily game. Chris, I'm going to lay out a quick opportunity for accredited investors. And if you want to say anything else before I get into that, please do.
Nope, I've talked too much already.
Okay, cool. So those of you that are looking for an investment opportunity, this is open for accredited investors. What it means to be accredited is that you earn 200K or more per year as an individual, or 300K as a married household couple, or you've got $1 million worth of assets outside your personal residence. So it's not some special test or certification. Accreditation is a self thing. You check mark a box saying that you either meet the net worth or you meet the income criteria. So what we have for you today, this is an offer in the industrial space. We'll have a multifamily property soon for you. It's actually really close. Chris was going through some of the red lines on the contract for it. But in the time being, we have an industrial asset that is paying really, really good dividends. So there's two ways that you could potentially invest into this thing. We've been going out and finding these industrial assets. Every time that Trump or someone in his administration says the word tariff, this big scary T word, what's happening is that more orders are flowing to American manufacturers. How do I know that? Well, because we own some of these American manufacturers right now. American Precision Partners, this brand has several locations that we are investors in. And every single time that we keep hearing more of tariff talk in the news, we keep getting busier. In fact, this is one of our locations. If you look at the numbers, kind of the fine print on this, we are up 40% year over year right now on the top line. That's gross sales. That's massive. Like, you don't get 40% in a year unless there's something happening from a management perspective and from a market perspective. And we've got both in our favor. What's more important, though, is that the net profit, bottom line, it's nearly doubled. So while we're growing the business, we're making more net profit. This is dividends back to investors. So it's really cool to see this. We've got the wind at our back in this opportunity. The way that it works, if you want to come in on something like this, is that either you can be an equity investor, where you come in with $100,000 minimum, and you can get an 8% preferred return, and then 50% of the net profit from us when we turn around and resell these industrial assets. That time frame is scheduled to be around 5 years. It might be 3, it might be 7, but 5 is about our average for this. What we're doing is we're buying several of these locations, and we're going to do a private equity roll-up. That's just fancy terms for big private equity firms don't want to buy one individual manufacturing facility. They want several. They want it to be big enough. And so we're basically streamlining processes, and we're bringing the whole package to a private equity firm, and that's when we'll all exit. In the time being, though, you can make a nice 8% dividend essentially every single quarter and be a partner with us in the deal. If you'd rather treat it as a loan where you get fixed monthly payments every single month, we have an option where you can get up to 10%. You come in as a lender, you will get a secured position. You can either take a lien against one of the pieces of equipment or against the real estate, and you can get a beautiful 10% double-digit return as a lender on the property. If you're wondering, like, where's the value add play? It's mostly in the market because, again, this administration's pushing tariffs so much. But in addition to that, we've really gone in and make sure that our operator is making these into real businesses. So we're taking these old school 100-year-old manufacturing facilities, like this one literally is the one that we're closing on, God willing, next week. It was started in 1913. I've been through the financials, at least the recent ones, and they've had 100 years of money coming in every single month. But what they didn't do is they didn't upgrade to modern websites, modern CRMs, modern salespeople going out. And we've been doing that. So each of the facilities that I mentioned over here, the reason that we're growing them so much is we've got the wind at our back with the market, but we've additionally been upgrading the systems to make them modern day businesses. And consequently, they're all doing well. They're thriving right now. So if industrial excites you and you want to take a peek at it, then use the link that you see in the comments right now. Book a call with our team. We'll have a 15, 20-minute conversation. We don't want $1 from anybody unless it's a good mutual fit. So we'll have a conversation. You interview us, we'll interview you. And if we can help you, awesome. If not this deal, then maybe one in the future we can connect on. If you're following us on social media and you don't see a link, put the word call in the comments, C-A-L-L, call, and our team will send you a private message with the link. All right, Chris, before we sign off, I got to jump, and so do you, in 5 minutes to go do some investor phone calls. Before we sign off, is there anything that you want to wrap up on today?
Yes. There's one thing that I always like to say. If you reflect back on the past 5, 10 years, and let's say even Bitcoin, if I had only invested in Bitcoin 10 years ago, I'd be worth $100 million today. Well, the decisions you make today is the life that you're going to have tomorrow. So whatever it is, please, please, please do something with the wealth or the money that you have today so that it grows in the future. If you keep just not doing anything, nothing's going to change. The only way things change is if things change. So take that first step, whether it be education, whether it be an actual investment, but do it so that your future looks brighter than your current. That's all I got.
Beautiful. Thank you, guys. Appreciate having you. We'll see you next week on the Opportunity Zone.
See y'all later.